What's up, everybody? Welcome to my YouTube channel. My name is Leela, aka No Limit Lee, and today I'm going to be doing a weekend breakdown. So, usually, what I do in my weekend breakdown is I review all the trades or trades I didn't take, just the market in general from this past week, and then I go into what I'm looking for or how I think that the market is going to move for the following week. And I also look at the news and just based on how this year's been going or the previous month's been going, just looking to anticipate what each trading day will look like depending on the news that we have. So first things first, let's start with reviewing everything from this last week. So this last week, I believe, let's say it was the 11th. Actually, let's just check the news calendar. So, oh yes. So we started on the 11th of August and we ended yesterday, Friday the 16th. So this week actually was a lot. We had PPI, CPI, let's see, what else do we have? Retail and unemployment claims all in 1 week, which was actually good because I believe like towards the end of last week, the market was consolidating a bit. So I was getting a bit frustrated. I do not do well in consolidation. So I was actually kind of excited for the news because I expected, some kind of breakouts and the market to get clear on the direction that it wanted to travel. So with that being said, I know we've been bearish for like the past 2 months. I was concerned because I saw, even though we're kind of in the middle of the month, I did see that like buyers were kind of gaining some momentum, even though this candle was initially all the way down here as with the sellers in control, it looks like the buyers were coming into play. So I was wondering if we were going to have a bit of a reversal. But and I saw this level of support that the weekly had formed from last week. So I was worried that we might have a push from the buyers. But based on my structure on the daily, I knew that this was expected. So we had this giant push from the sellers. This was all the way back in July. So from July till like August, it's been nothing but buyers being in control. Based on my structure points, this was literally a high and we went to a low. So the next structure point I was looking to be formed was a lower high. Since we were in a selling market. So that I know is only formed once we get above a nice bullish bearish candle. What I actually looked for, because the daily wasn't clean enough for me, so I wanted to see on H4 how structure was forming. So this is usually my main time frame that I look at for structure between the daily and the H4, and it depends on how structure is forming. Right now on daily, it was just a lot of candles, which is very thick, but no like structure points, and I'll show you on H4. So H4, I like this. I felt like there was more structure. So I literally just drew this out. Lower high, low, lower high, low, lower high, low. And from here, I was like, okay, so clearly this was our last point of support. So I'm projecting that the market will somehow get back up to this level of support in form of resistance, and then I'll look for an entry from there. The problem was, it was so ugly. Like the last 2 weeks, I think the last like nice move that I caught was probably this push up, and then the market was like consolidating, no real movement, and I lost like, I want to say like 4 trades in here, and then I was like, yo, I'm not trading anymore. And so when this week started, I was like, yeah, I think I took 2 L's, and I was like, you know what, I'm just not going to trade right now because I'm going to get frustrated, and then it's going to mess with my psychology, and then I'm not going to really want to enter trades when I should be entering trades. So I just took a step back, and I want to say like from the end of Monday up until after CPI, I didn't take a trade. So let's start from there. So from Monday, let me just close this out. So from Monday to CPI was Wednesday. So we're about right here, right before CPI news came out. The reason why I didn't want to take a trade was because, so let's talk about CPI for a second. The last month we came in under inflation. CPI is inflation. We came in under expected, which kind of caused this huge bearish push. The problem was I didn't know if we were going to have the same level of reading again. The reason why I didn't want to be in a trade before that news came out was because I wasn't confirmed or comfortable with market direction, because like I said, we were in this kind of tight zone of consolidation. And I had to take a couple L's back to back, even though those trades were within my rules. So I really think that for me, I wanted to wait until CPI so I could see the level of direction that the news was going to go and bring the markets. So I think CPI we came in under for the yearly by like 1.1%, but for monthly and core monthly, we came in right at projection. So I knew that means it probably was going to give the market a little bit of a push, but nothing to like break the overall bearish trend that we were seeing. And so that's when that news came out. It gave me that push into this zone. So this zone is my exhaustion zone. This was based on that, like I said, that last point of support that we had based on the H4 structure. Once the market entered into here, this is my area of highest opportunity for me to take a trade in a nice trade. So I took, I'm actually in 3 trades right now, and I'll break it down how I took those trades. But I took my first trade based on these 2 candles at the top. So what I did was I was trying to get into the highest point possible. I saw that we had a little exhaustion come on this top blue candle right here. Let me zoom in a little bit more. I saw we had a point of exhaustion from this candle right here with that wick at the top. Then I saw this nice small doji form. So once I start seeing that, and I'm seeing like, okay, the buyers are getting exhausted. I had a curve right here on my SMA line. So I'm like, okay, looks like sellers are coming back into play. The first thing that I do is I'll go from we're on H1, I'll go into M15, and I'll start to see, okay, again, I'm looking at what is structure doing. So on M15, I see that, the market was making like higher lows, another higher low. Then we had our first kind of like lower high, and then we had a test of this low right here. This is test because it didn't break this level of support yet. And then we had the formation of another lower high. Once I start to see this, I'm looking for my entry. In fact, let me just delete this part. In fact, my entry actually came because of this beautiful candlestick pattern. This right here, I'm actually not sure which ones particularly it is, but I know what it means. It's either 3 white crows or 3 white soldiers or 3 black crows. I can't remember because my chart is in a different color, but I know whenever you see let me just put this in yellow. Whenever you see like a nice solid bearish candle, 3 bullish dojis form, and then another bearish candle form completely like past when it closes completely past the open of this one, I know that this means that a lot of selling pressure is coming in. So my entry was actually on this candle. It was right on this candle, because once I saw this nice push, this test of the support, I waited till entry right here. And my stop loss is actually right here based on this. My stop loss was right here, right at the end of the zone above this exhaustion point on this doji and above this exhaustion point too. So I know that my stop loss is in a very good place. Like if the market was to retrace here and go all the way up, then I knew, okay, then I'm just wrong. But I felt really confident on this trade, so I took it. And yeah, so I've been writing it out. The next thing that I did, I took this first trade only on my personal account with my own money. I didn't take it on my funded account because it doesn't match my funded rules. On my funded account, my rules is I can only take a trade based on my entry rules, which is the previous support or resistance. But in this instance is support because we're looking for sales. In this, I wanted to wait until this level of support was broken and then some kind of bearish engulfing candlestick pattern to form before I enter. So the good thing is this happened like towards the nighttime, like I want to say, yeah, about like 9 o'clock. So I actually went to sleep after this, and I was comfortable going to sleep, which is rare, but I was comfortable going to sleep because I knew my stop loss was outside of like the fluctuation zone, but also because I got a really good entry. And this has been an area I've actually been looking at since August started. So I was very comfortable with this, so I went to sleep. My ideal entry from my funded account actually would have been like, let me grab this. It actually would have been on this bearish engulfing. As you can see, that was at 4 o'clock in the morning. I definitely was asleep. Like I was not on the chart, so I missed this entry, but that was okay because I think, you know, my initial entry was a little bit higher than that, so that's really good. So what I waited for, so I watched this. So my entry was around here. I waited for the market to form a level of support after it broke this level of support. So I knew that the bearish trend was going to continue, and I just wanted to wait for the next lower high. And that came around here, this Friday around like 12 o'clock. So once I saw again, we have a level of support, but look at these bullish candles. They're not strong bullish candles. These are not like trend reversal bullish candles. These are showing me the sellers are still present in every single candle, especially this one with this long exhaustion wick. And then the next one formed again with the long exhaustion wick. So again, I went down to the lower time frame. I saw, okay, there was a level of resistance that formed here. I drew my trend line, and then I just waited to see what was going to happen first, whether this level of support was going to be broken or if this level of resistance was going to be retested. And so this level of resistance was retested. I saw a bearish engulfing form. And again, based on my rules, this is perfect because not only do we have this level of support be broken, we had the major levels of H1 support be broken. So this was a textbook entry for me. So I entered on the second bearish engulfing right here. On the second bearish engulfing, this 1-2. And I entered in on my funded account as well as my my personal account. And that's kind of how we ended the week. So I started off the week really frustrated and a lot of consolidation. I took a lot of L's, wasn't happy about it. Following my trading plan, but definitely this one was very kind of tough on my mental. But I'm glad that I actually stopped trading and was able to just think very clearly and not be so emotional, because then I was able to take advantage of this setup that I had been looking at for the past 2 weeks. So that's it for what happened last week. Now let's go into what we're looking for in this week. So let me just clear up my chart a bit. So this week, let's start with news. That's my favorite thing to do first. Let's see what we have coming for this week. I normally like to actually just pay attention to the orange and the red impacted boxes. Also, what I'll do, because I only trade USDJPY. I probably should have said that in the beginning. I mostly only trade USDJPY. That's just what I've been doing. That's what I've learned on. I've been trading it for the past 5 years, so I know it really well. And I have confidence in my trades when I take it. So that's really the only thing that I want to see. News from the yen and news for the dollar. And that cleans up all that mumbo jumbo that I don't really need to see. So this week, I said we have FOMC speakers. We have FOMC meeting minutes, more unemployment claims, some manufacturing and services PMI, and we have Jerome Powell speaking this week. So these are actually very huge things. I don't know if you guys pay attention, but you should be paying attention to fundamental news anyway, just for your life. If you live in the US, you should be paying attention to what the market's doing and what's going on. But because that inflation reading last week wasn't really strong, so for the past, let me go back and explain it. So for this, I want to say the past 2 years, since the Fed was raising interest rates, they've been saying they want to see basically sustained control of inflation before they start lowering the rates. Well, we had our first actually, I would say bearish reading of inflation last month. And then this month, it was kind of bearish, but it wasn't strong enough that I think that the Feds will say, next month, yes, we're going to cut the rates in September. So I think this week with all of the FOMC and Jerome Powell speaking, we'll probably see, if that's true or not and how he felt about those inflation ratings himself. With that being said, that actually lines up really well with how I'm looking at the chart in my entries. So, give you a great example. If Jerome Powell says the inflation reading was, weaker than expected, or we wanted to see more control of inflation, meaning they wanted to see, actual inflation miss the gap of the projected inflation by a lot more, this market will be very bearish. And the reasoning is everyone right now is waiting for the cuts of interest rate. Cutting the interest rate makes the dollar stronger. They love it. And it's gonna be bullish, right? But because we didn't have strong inflation readings, and I think our unemployment claims last week actually came in under. So it doesn't seem that we're having, as the fear that people had of a recession isn't happening as quickly or as strongly, I should say, as we thought. So for me, what that means is now remember I was saying earlier, I was waiting for that lower high to form on daily. That lower high just formed. Now, what I did is I'm going to take out my Fibonacci tool, and I'm going to see, where did that lower high form? For me, it's great. It formed on the 38.2, which based on my rules, that means this will be an aggressive push to the 23.6. Let me see if I can just show you where my 23.6 is. So my 23.6, Lord help me. My negative 27%, sorry, my first TP that I would be looking for, actually it's not my first TP. My main TP or my main projection of where the market would go is to the negative 27%. That's just based on this tool. That I think is possible. If all of the news that we have this week is bearish, then I definitely think that I have potential to get there. Now, honestly, what I'm really looking at is my first TP is this support. Is this support that I have on the daily. This was the first level of support that was formed on the daily since we had that giant bearish push back in July. My first TP, or my first point that I would look to take profit, is if the market comes all the way down here, if price comes all the way down here and forms another level of support. So that would be another bearish and then bullish candle. And then I'm going to be out. I probably would make a good enough amount right there. If not, if price continues to want to, if the sellers continue to be in control, if news is lining up with, the bears, then I will hold. I'm going to hold until I get to this negative 27%. And then I'm also going to be looking for more sell entries along the way. So that's like my two projections for the week. It's one, let's see what Jerome says. Let's see how the FOMC meeting minutes are. And two, I'm just going to hold these trades and manage it. Let me get back to pretty view. Okay. Yeah, I'm just going to hold those trades and I'm just going to manage it. And the good thing is the last two candles that H4 formed before the end of the day, Friday, was actually a bearish engulfing. So I'm seeing a lot of signs of very strong sellers present. Look at this. Look at this selling candle. There's almost no wicks. It's just body. And then it engulfed this. So let's see how far the market's going to push this week. Let's see what the news says. But that's just my predictions for you, Jay. And hopefully this will be another profitable week. But thanks, guys, for being here with me as I ramble and just go through the charts and see what I'm looking at for this next week. And I pray that you guys have a profitable week as well. And of course, like, comment, and subscribe. Talk to me in the comments what you like, what you don't like, what you want me to break down, what you want to see. Other than that, be blessed, everyone. Peace.